All right, so back to another weekend. This is Saturday morning, 10th of Jan, 2026. And this is our usual next pro doubt clearing session. We'll take a look at the Nifty and the sectors, try and understand what's happening where. That should help us to position ourselves the week ahead. So, starting off with the Nifty, on my screen, I have two time frames, weekly on my left, daily on the right. Starting off with the weekly, clearly we can see it was a big outside bar and the close was towards the low of the week's range. My state of flow from the weekly point of view, there's no state of flow. And visually, both of us can clearly see that the Nifty has been particularly choppy and range bound. Now, from the mid of December, I have been of the opinion, the narrative was that end of the year, FIIs will be sluggish, don't expect any big directional move, the market can stay range bound. It did stay range bound, but the range had a certain size to it. We can see that very clearly on the daily time frame, that the range was pretty choppy and pretty wide. It gave short-term momentum moves on the upside as well as on the downside. So, do we have any directional clarity from the weekly? No. Momentum recently on the downside, but overall from the weekly chart, nothing stands out. Yes, the overall structure, if I take a look at the long-term charts and everything is angling up and all those things are fine, but it is difficult from a trading point of view. So weekly is not giving me any clarity. I'll say, let's stay neutral from the weekly chart. But with that thought, when I come down to the daily, couple of things definitely stands out. Standout number one, and I will reiterate once again, that few days back, around 3 to 4 days back, when we noticed this slip, that the market slipped after giving an all-time high breakout, our opinion was, let's take it a little careful. There are no signs of divergences on the top, but there are signs of a prospective breakout failure. And so the call was wait for a lower shadow. It came. Wait for the lower shadow to get breached. It breached. And then it was the fact that don't get surprised if the market falls. And the market fell. It's not about boasting that, listen, it went out really well and all those things. But the point is of what next? What next is the short-term trend, the short-term state of flow with momentum has turned down. And the index is back to these levels area from where in the past it had managed, bounce backs. So you can call them prospective short-term supports. But the recent sell-off has been pretty serious. I use Heikin Ashi charts and I understand them. But if you use bar charts or candles charts, if I change the daily chart, you will be able to understand the extent of the selling particularly for the last two trading sessions. Let's not go into the reasons of what 500% sanctions and geopolitical tensions and this and that. Let's not go there. We read, try to understand what's happening from the language of price. And so we will stick to price. Short-term trend momentum has turned down. Weekly is neutral. When you combine them, it tells you, listen, stay away if you're a long-only trader. If you are a derivatives short trader also, of course, you will start to see sectors and stocks which have deteriorated and can give you pullback short trades. But from a majority long trading point of view, this is not the time that you act. It's the time when you observe and wait out. You only act on those sectors, on those stocks which have shown relative strength, and structure-wise, they are much more positive. Nifty structure, weekly is neutral, or should I say, what's our view for the Nifty rather than using the word structure? Nifty from the weekly point of view is neutral, choppy, not that great. Daily point of view is negative. So any kind of a bounce back should be looked into very, very carefully. Because if the bounce back is not enough and opens up on the downside, then that second leg on the downside can be serious and vicious. But we are open to anything because in the past we have seen that the bounce backs have come and it has led to further upsides. But this kind of a market towards the second half of December and this kind of a market where we are right now, that is after the first 10 days of the first month of the calendar year, are different. So be little careful. So Nifty, stay away, stay on the sidelines. Mid and small caps, starting off with the mid cap, which was relatively better off. We will see that most of these charts on the weekly time frame will give us big outside bars. Outside bars are those situations where you get higher high, sign of strength, lower low, sign of weakness. My suggestion is whenever you see outside bars, always check where it closed. Did it close near the low or did it close near the high? In this case, it closed near the low, which means that the high was breached first and then it fell and broke the low. This is an outside bar, which is giving us a sign of weakness. Mid-cap, same view, just like the Nifty. State of flow has gone away, daily chart has turned down, etc. So it's the same view. I will take the green flag of mid-cap. Small cap anyways was negative and we were staying away from it because of the relative strength was not there. Weekly has just started to improve, but again, the same story. And you can see where the small cap, the CNX small cap index is right now or has been trading currently vis-a-vis its all-time highs or 52-week highs. So it's distinctly an underperformer pocket. It has come off quite a bit and there's no change in our particular view and we would prefer to stay away from the small cap pocket. Let's see how much more, if it corrects or not, will it break below the current lows or not. That's the Nifty and the broader markets. Nothing actionable that we can find unless you are derivatives and you're looking for some short trade. Now coming to the sectors, these are the 16 sectors. We always bring in the RRG graphs. And last time I think we did a 20-week analysis based on this particular low. Now what I would like to do is I would like to see or figure out the relative strength from this point of view. Because after this was the last time we had a good looking serious rally followed by a correction. After that, every attempt to an all-time high has only led to breakout failures and frustrations and range-bound price activity. We can see that. And so if I use one of these tools on TradingView and just figure out how many days, I'm doing this on the daily chart, how many days it has been since this choppiness. So it tells me around 44 bars, and on the weekly, can you see that? It's getting plotted on the weekly also. It's showing 9 bars. So around 9 weeks, 9 to 10 weeks. So what we will do for this weekend's analysis on the strike analytics when we use our RRG graph, we'll come to the RRG section. We will come down to the NSE sectors. We will change the benchmark to Nifty 500. We're not going to use some 40 count of the daily because it will give us a very long tail and it will, the entire RRG will look a little, cluttered. So we'll go to weekly and we'll take a look at 9 weeks. 9, 10 weeks is, see the 9 weeks and 10 weeks is only going to give me 1 week's longish tail. The current situation is not going to change. So 9 and 10 is not going to change the view. So let's stick to 10 weeks. And over the last 10 weeks, let me cross check before I start analyzing. 10, weekly, 500 and sectors. Yes, all good. Sorted, I think it is more or less sorted in terms of percentage change. Let me do that once more. And we see, first thing we see more or less equal amount of stocks in the leading quadrant and in the lagging quadrant. That's exactly what we noticed last weekend's analysis. Improving is gone. Improving quadrant, there's no sector within the improving quadrant. and there are few in the weakening. So let's start with the first one on the leading quadrant, and we have IT. Remember, I'm doing this on a 10-week point of view. And over the last 10 weeks, IT has done better than the PSU Bank also. So I can see almost 5% gain. You must have heard me saying that any RRG sloping like this is a good RRG, gain of relative strength, gain of the momentum as well. So positive on IT. We always club the discussion of IT and digital together. The digital is not here on the strike watch lists. So what we will do is we will go back to our charts and quickly take a look at IT and digital. In both IT, CNX IT and the Nifty India Digital Index, we had kept a bullish bias. Digital, however, we took the flag off. Starting with IT. Weekly, for the last 2 weeks, it has been cooling off. Short-term momentum has come off and it's slowing down. Okay. Daily, which was oversold and giving us some signs of short-term divergences, did give us some kind of a bump up move, but it's not easy. It is choppy. It is a little volatile. It has created shapes which are on the higher side as well as on the lower side. Not an easy one. Relative strength is there. Price wise, it is correcting and consolidating. Should we maintain the green flag or should we take it off? My weekly state of flow has turned negative. My daily state of flow is all jumbled up. It was positive, it was just positive and then it starts to cool off. So it's not very clear picture from the daily. Early signs of slowdown from the weekly and relative strength is there. So it's got everything in it. So price is the ultimate. So I'm going to take the green flag off. I'm going to wait out a little bit. Question mark, what am I going to wait out for? I'm going to wait out for at least the weekly chart to improve a high low on the week. So am I bearish on IT? No. Am I bullish on IT? Not really. But I would like to see price improved and then I would like to go back to bullishness. Digital, we had taken the flag off last week. I remember. Let me sort it out. It will be easier for me to find it. Digital comes at the, down here. So weekly has turned clearly bearish. State of flow bearish, Heikin bearish. Daily anyways is bearish. So this kind of a formation can lead to further downsides. So we should mark it red. Number one, flag it red. We should understand that there are short-term weakness in stocks and sectors which are weak, and there are short-term weakness in stocks and sectors which are relatively strong. This is a relatively strong sector, correct? It has that support of few IT stocks, and this is the range that we should be looking out for because this was earlier a very, very important level which it broke out. And what it is doing right now is giving a throwback to that level. You take a look at the higher time frames, if you go to monthly and all, you'll find a much stronger chart. So the view is bearish. That does not necessarily mean that I have to short it. The view is bearish means I'm not going to go long right now. What I'll do is for further future reference, I will draw this range and keep it like this. It will be easier for us to remember that whether this polarity will hold or not. Generally, when I draw this, I give it a red or a blue color depending on whether I expect resistance or support. So now I'm expecting support from it. Whether it will get delivered or not, that time will only tell us. So rather than this, wait a minute. Yeah. So let's give it. So we will remember this as we move on. So digital and IT both goes stay away. Relative strength is there. Because the relative strength is there, we should definitely be excited on the long side if we see prices reviving. The next few within the leading quadrants are good ones. We have Nifty Bank, though, however, it's not angling up, it's angling down right to left. What does this mean? It is gaining relative strength, by the way. but it is losing momentum as it's gaining. Nifty Bank is looking like that. Private Bank is looking similar, and financials is also very similar. Please understand that their positioning is very close to the 0 point, the axis, which means that they do not enjoy a huge relative strength. None of them enjoys a huge relative strength per se. The best thing about the discussion so far that we are having today morning is in the leading quadrant, we have banks, of course, private banks, we have financials, and we have IT. And if I'm not mistaken, that will easily take you to around 57% of the entire Nifty's weightage. So any kind of a gain from here on, they have relative strength. So any kind of a bounce back from here on will easily support the Nifty. This is a good positioning. But if it doesn't hold, then all these guys will start to lose their strength. So with that thought, can we quickly go to the charts of Bank Nifty? Bank Nifty, we had kept a green flag last week. The weekly charts relative strength has started to improve. The state of flow has started to improve. This formation is not that bad. The close is bad. The Heikin is not bad. The weekly Heikin is not bad. The weekly Heikin's positioning of the close, that's bad. That's not good at all. Actual close. Heikin close is always an average close. Open, high, low close divided by 4. So Heikin close is always slightly different. And because we had this rally, the average price is on the upside. Weekly is fine. RRG is also positive. Daily is not fine. So we will maintain a bullish flag because most of the markers are bullish. Most of the markers from the higher time frame is bullish. So we will maintain a green flag. We will also definitely take a look at the private bank. Same logic, we are maintaining a green flag. CNX Finance is choppier. Relative strength we have seen there, and same story. It's been pretty choppy. Means not easy, to be honest. It's now going towards the range breakdown. So please understand, all these green flags will go away next weekend if we see a follow-through move. The point is, the $1 million question is, sir, if we get the pullback, should we, I'm a derivatives trader, should we short these charts or not? My answer to this is no. Why would you like to short this? Because it has relative strength, it has price structure. It may fall. We're not here to catch every fall and every rise. Might as well look at weaker sectors. Fine. So finance, Bank Nifty and private bank, we are maintaining with the green flag. It is vulnerable for a reversal. So stay open. It's not aggressively bullish at all because of the positioning of where it closed vis-a-vis the kind of range that it has developed. It is now aiming towards the breakdown. Let's quickly discuss the PSU Bank also. The PSU Bank, we have not taken a look at the RRG, but overall, the weekly charts state of flow is fantastic. Heikin, body, close, everything is very good. This is one pocket which is behaving much better. We have a possibility of a polarity playing out, possibility of a polarity. Can't comment right now. So we should maintain a bullish flag. The RRG of PSU Bank, if you remember, had a lot of relative strength and all that. It has come down to weakening because it's been slipping. But please see where it is vis-a-vis this 0 point, this axis. It has enormous relative strength. So these kind of relative strengths are easy for short-term bounce backs. So PSU Bank, we are maintaining the green flag. Now that we're discussing weakening, quickly let's discuss the two others which were already there. One is metal and one is auto. Both of them in the weakening are managing a momentum bounce back. So both of them should be giving us a bounce back. Out of this, we know, especially both of them has given a very good move, but the metal, CNX metal, an exceptional rally. And yes, it is cooling off for the last 2 days. Metals per se and metal stocks also has come off. We discussed this end of the week. So our analysis is not short-term from the daily chart. Our analysis is primarily, predominantly from the intermediate time frame, weekly markers. Weekly markers are all positive. Relative strength is there. The momentum is improving. Price structure, weekly charts, state of flow is beautiful. It's giving you a short-term correction. So you should be looking out for long trades, no doubt about that, from metal. So maintain the green flag. CNX Auto, same story, a little more choppier than the metal. But again, over here also, we have a possibility of a polarity kicking in. I'll add one extra sentence here. I'm looking at a sector which has a very good looking weekly state of flow. I'm looking at a chart which has given a short term correction and has gone oversold and all that. And in our parlance, we might get an LFDF kind of a long setup anytime soon. Should I take that or not? So the point is, yes, you should respect the setup and take the trades, but you should always remember what is the overhang of the overall market. I'm talking about Nifty. By the time you get a setup, Monday, Tuesday, Wednesday, whenever you get a setup, please understand how the Nifty has played out. Has the Nifty also bounced back and showing revival? Then your conviction will be little higher. But if you say, no, the Nifty has not gone anywhere, the market is very selective and the Nifty is still on the verge of a breakdown, then still you can take a trade, but be little, what should I say, on your toes and make it a hit and run trade rather than sitting on it. So auto metal, I would consider stay bullish with that mindset. Moving on, we don't have anything on the improving quadrant. So the rest of the entire discussion today morning is going to be with the lagging. Now, with the lagging, media was the one which has the maximum underperformance. Sorry. It has a maximum underperformance and it has been picking up momentum. Media is something that we do not discuss that closely, but that is the one which is picking up the momentum. What are the other ones which are important? PAC and energy. These two charts were encouraging last weekend because they were opening a possibility of a breakout. We will take a look at the price chart and you will remember. But RRG wise, I can see PAC, this is energy, Nifty energy, falling down. This RRG we don't like. It's losing relative strength. It's losing momentum. Energy, not that great. Nifty PAC, picking up a little bit, you can see here, but again, not that great. These two charts, energy and PAC, were relatively encouraging just few days back. Not now. Because just few days back, they were knocking these levels, which could have given us a huge multi-week, multi-month, big breakout. But it could not sustain. It could not give us that breakout. On the other hand, it reversed very sharp. And now again, it's back to. Means just 3 days back, we are talking about range breakout, resistance breakout. And just after 3 days, now we are talking about support breakdown. So that has been the kind of move that energy has given us. Anyways, the weekly, in terms of our calculations, the weekly state of flow is on the positive side, thanks to these two green Heikin bodies. But the daily chart has cooled off quite a bit. We do not have RRJ in our favor. We have price in our favor. So if you're a short-term momentum trader, one can actually look at these kind of bounce back. Because our state of flow has turned bullish on the weekly time frame, the close is not that good. We will mark it green and see whether we get any bounce backs next week or not. Public sector enterprise, similar story, but this is slightly better off. Slightly better off. Again, the same story of a prospective range breakout. It did inch above that and it slipped. Our state of flow, and if you notice, the Heikin in PAC is far good looking than the Heikin in energy. Over here, the weekly Heikin has a good looking body to itself and a short term correction. This is where you will get the classic setups of LFDF in our parlance. So we will maintain the PAC to be bullish, looking out for bounce backs. Between those two, PAC looks good. Now, when it's about PAC, you can have PAC in defense, you can have PAC in banks, you can have PAC in energy, right? So sort the stocks in terms of weightage and understand them. So fine, we mark two green flags, especially PAC is looking interesting. Now we quickly take a look at consumer durables and energy. Consumer durables, RRG wise, picking up. Okay, not that great. Price wise, exceptional move because of just one or two stocks, especially the one that enjoys the maximum weightage. Talking about FMCG RRG is not good at all. It had a sharp sell-off because, again, one of the stocks which enjoys a lot of weightage. Seems like consumer durables is improving a little bit. Let's take a look. We had a red flag last week because of state of flow, but this week it has been a bumper of a move. All of a sudden, from small red-bodied Heikin, the weekly Heikin has turned bullish and green. Our state of flow will only come into relevance next week. It cannot just go from red to green. It has to give some time for confirmation. So the weekly is neutral. Daily is positive, and on the RRG, it is picking up a bit of momentum. This is not going to be easy. So I'm not going to go from red to green straight away. I'm just going to go neutral. Hopefully, it will stop somewhere here and give us a revival. And if it goes further up, then the weekly state of flow will turn positive next weekend. So for this week, I think I will go neutral. FMCG was red, and I don't need to spend much time here. You can see the breakdown on the weekly, on the daily. So stays red. I'll add another extra line here, which I tend to do once in a while. That is, red flagging does not mean that we expect it to fall. Red flag means the markers are red. The analysis is bearish. Okay. What are the rest left there? Is small cap. We have discussed that. And reality. Reality also not looking that great. So we'll go back to our charts. We'll take a quick look at reality. Reality, we had kept it neutral because of the weekly just gone neutral. Now, weekly, because of this last week's upside move, our state of flow has turned positive because of that move. But it also retraced quite hard, and the state of flow on the daily has turned negative. And this is completely normal because of the sharp behavior of price. RRG negative, weekly improving, daily negative, stay away. Stay away is the best thing. We decided to stay away. I think that was the best thing. There are other sectors which we generally discuss. One is Nifty capital market. Weekly has gone neutral. Daily is cooling off. Stay neutral. No flag. Chemical is building up, slow and steady. No flag. Consumer durables we have discussed. And the another one that is defense. And the final one is tourism. Defense is something which has given us two state of flows positive on the weekly. Weekly Heikin is bullish. Daily is cooling off. In fact, daily state of flow is also bullish. And we might get something like a thunder setup on our daily charts. So, jo ye PAC that we like PAC and the PAC is looking encouraging. So, will it be the defense PAC which will support? This is where you have to pick up the cues and probably figure out where the jigsaw lies. If the PAC moves, which category of PAC will move from which universe of domain of PAC stocks? So defense needs to go for a green flag. We do not have RRG of defense and tourism and chemicals as of now. So we're just sticking to pure price analysis. And last, India tourism. India tourism was red and it stays red. Come on, there's nothing much to be analyzed here. Weekly has had stayed red for quite some time. Weekly is actually, the state of flow has turned neutral because of this bounce back. But anyways, the overall view was to maintain with the negativity. And so there it is. We have still few sectors which are holding on to their forts and can give us a bounce back. If they don't, especially the financials and the bank, if they don't, then it will be difficult for the Nifty to sustain, right? Autos and metals can do a little bit here and there. PAC we've just analyzed can be a prospect, but don't be overly bullish. Don't get too carried away with the market next week. We would like to see whether we get that range breakdown or not. I will repeat one more time that I've always noticed that after the first week of Jan's trade, you tend to see some directional move. Now the Nifty has come close to the lower border. And if the breakdown comes, will the directional move be on the downside? The possibility of that is increasing slow and steady. The overall news situation scenario is also not very beautiful and positive and cherry. It's slightly bitterish. So please hold on to your aggressiveness and trade with a lot of extra caution. Right there. So that's our usual end of the week market analysis. Now, I missed Pharma. Thanks for spotting that for me. And where did I see Okay, Pharma is over here. Thanks a lot. So Pharma is gaining traction. Relative RRG has just knocked inside the leading quadrant, but I'm more interested in the angle it's rising. So it's a good RRG. Relative strength wise, good. Pharma, last week we had kept it neutral because it was range bound, but it gave us a breakout. It gave us a breakout. It has given us a throwback. The weekly charts, see, it's been choppy, red, green, red, green. So how can I create any kind of view? So the weekly price is not giving me any directional clarity. Daily is giving me, RRG is giving me. So what we can do is we can mark Pharma green and see whether we will see any kind of a revival or not. If we get that revival, then the weekly charts state of flow will turn green. Right? Yeah. So I missed out Pharma, and that's how it looks. So this is where I'll end our end of the week discussion. Now for the rest of today's session, I'll take up your doubts and questions.